Market intelligence.
Every time the world gets unstable, most investors do one of two things. They panic and sell everything, or they freeze and do nothing. Both are wrong. This is Atlas Market Intelligence, and today we're going to show you exactly how the smartest money in the world positions itself when geopolitical instability hits. First, understand this. Geopolitical instability is not a rare event. It is the permanent condition of the modern world. There has not been a single decade in modern history without a major geopolitical disruption affecting global markets. Here is the hard truth. Most portfolios are not built for geopolitical instability. They are built for a world that no longer exists. Here is the framework. There are 5 asset classes that historically strengthen or hold steady during periods of geopolitical instability. Number 1, defense. When governments feel threatened, defense budgets expand. Defense contractors and aerospace companies receive guaranteed government contracts regardless of what markets are doing. In 2022, when Russia invaded Ukraine, global defense stocks rose an average of 20%, while the broader market fell 18%. Same year, opposite directions. That is not coincidence, that is structure. Number 2, energy infrastructure. Geopolitical tension almost always disrupts energy supply chains. When supply is threatened, prices rise, and energy producers benefit directly. The Strait of Hormuz, the Russian gas pipelines, the Red Sea shipping lanes. Every one of these flashpoints created energy price spikes that rewarded investors who were already positioned. Here's the contradiction Wall Street will never say out loud. The worse the world gets, the better certain portfolios perform. Chaos is not the enemy of wealth, misalignment is. Number 3, hard assets. Gold has risen during every major geopolitical crisis of the last 50 years without exception. This is not a trend, it is human nature, and it is documented. Number 4, domestic semiconductors and critical technology. As the world deglobalizes, countries are racing to build technology supply chains inside their own borders. The CHIPS Act, the EU Semiconductor Act, Japan's Rapidus program, every major economy is subsidizing domestic chip production. The companies building that infrastructure are being paid by governments, not just markets. Ask yourself this: if governments are spending trillions of dollars signaling exactly where the world is heading, why is the average investor still reading yesterday's earnings report? Now here's what most people get wrong about all 5 of these. They wait until the crisis is visible before they move. By then, the opportunity is already priced in. The move has already happened. Studies show that the average retail investor underperforms the market by 1.5% every single year. Not because of bad stock picks, but because of emotional timing. They move after the news, not before it. This is why understanding geopolitical intelligence is not optional for serious investors. It is the edge that most people never develop, because nobody teaches it. Here's the Atlas framework for geopolitical portfolio positioning. 3 questions every investor should be asking right now. Question 1. Where is military or political tension rising that the market hasn't fully priced in yet? Question 2. Which supply chains are most vulnerable, and who controls the alternatives? Question 3. Which governments are writing the checks, and which companies are cashing them? Because here is what Wall Street won't tell retail investors. Policy creates wealth before markets reflect it. Those 3 questions will tell you more about where markets are heading than any earnings report or central bank statement. Right now, in 2025, all 3 questions point to the same sectors we identified in our last briefing: defense, energy infrastructure, domestic semiconductors, and hard assets. And here's the final contradiction. The investors quietly winning in this environment are not the ones with the most information. They are the ones asking better questions than everyone else. The world is not returning to stability. Managed instability is the new operating system. And the investors who understand that will not be victims of it. They will be positioned for it, ahead of it, quietly winning while everyone else is reacting. In our next briefing, we go deeper, breaking down the specific sectors and instruments for building a geopolitically resilient portfolio from scratch. Stay ahead of the system. This is Atlas, and if this gave you a framework your financial advisor never mentioned, send it to someone who needs it.